Tune in to the Fintech Files for exclusive interviews with fintech executives and thought leaders. We will talk about how the industry will overcome the crisis that has marked the start of the decade, how it can be part of the solution, and how the financial world will evolve in the next decade. This is your host, George Alaferis from Arama.
This podcast is a reunion with an ex-Deutsche Bank colleague of mine, Timo Pfeiffer, who had a remarkable 15 years career there and was MD in charge of structured product sales and origination. Then he moved to Solactive, a technology-driven index provider. He's now the Chief Markets Officer, and he's going to tell us how it is to go from investment banking to technology and fintech, and why data matters so much more for the industry today. Timo, welcome to the show.
Thanks, George. Great to be here. I'm curious on the very first podcast I'm actually involved in.
Can we start by simply asking you if you're still confined, because I know you're based in Germany and things have changed there. So where are you confined and how is it affecting you?
I am actually right now at home in my office, but I wouldn't really call it confinement because, as you said, Germany is slowly, cautiously opening up. So the time in the office also increases. For example, I've spent the whole day in the office yesterday. Restaurants are opening. I got the first haircut after Corona yesterday, so hairdressers are opening up. So it starts to feel more normal. But right now, as I said, I'm actually in the office at home, which has mainly to do with school hasn't resumed and the kids are here as well. And it's just a simpler setup. But overall, I'm pleased to see that, after a tricky time, there's a gradual, slow, probably still fragile return to some sort of normality.
And can you tell us a little bit about how does that affect the business you're in, indexing? Do you see a great impact short term?
So the biggest impact short term clearly has been at the very beginning of the pandemic, which is how do we keep the most critical operational functions going? That's really been the biggest concern and the start at the very beginning. With everyone in the office, we've started doing a lot of testing about remote working, and that all worked and works surprisingly well. So from a pure, let's say, operational perspective, no distraction whatsoever. That's been really positive. Clearly looking at the financial markets, if you think of mid-March and the volatility levels and activities of clients, there's probably been a period of 1 or 2 weeks with pretty much a standstill. I think driven by the market, driven by the uncertainty that we all had personally as well. But really since then, there has been I would say, significant pickup again in terms of activity. Everyone got used to their own individual setup at home or somewhere, working remotely, communicating differently. So that has worked out, fingers crossed, so far. On the short term, pretty good.
Yeah, and just to go a bit deeper into these critical activities, of course, I guess it means you're publishing indices and this thing has to keep going whether people are in the office or not, right? There's no, is that the kind of thing that for those who are less familiar with your industry, is that the kind of things which are really critical?
It's really a lot about, I think, not different to other businesses, be it in technology or in finance in general. It's, how do you access your servers? How do you put up the screens? Who's accessing what from where in a scenario where not everyone is sitting in the office where we all used to work and have all setups in place. So it's really been mainly a driver from a technological perspective. We have reacted pretty early on. I think initially we managed to somehow get out of the Netherlands. Apparently some of the last, whatever it's been, 25 or 30 remaining laptops that were quickly available to ship over. And we got them already at an early date in, I believe, February. So that sort of preparations have really been the core driver of that, with the critical, you mentioned it, calculation functions as the absolute priority, right? Like I can pretty much work anywhere and less critical there, but that's really what has worked well.
All right, great. Let's talk a bit about your career and your current role. So we know each other for a while now. That ages us a bit, but we met at Deutsche Bank, and you were an MD at Deutsche Bank, and now you moved into more fintech and Solactive. Can you tell us a bit about the move and also what's different between working, in a large, very, very established institution versus Solactive, which is established but still more on the startup side?
We have indeed met. We need to check at some stage many, many years ago over, I believe, Winchester House, Deutsche Bank trading floor in London. We sat quite close to each other, I remember. From there, I've moved, what was it, in 2010, from London to Frankfurt. The move to Solactive has really been an intentionally choice for something, let's say, intentionally different. Had a great time in investment banking, a great time at Deutsche Bank, but let's say a completely different environment, also pre-financial crisis, post-financial crisis, with then, let's say, more administrative hurdles, more administrative talks, probably politics involved in a large global organization. So nothing at all negative against Deutsche Bank, not at all. But it just turned more tricky overall in a more regulated, restricted global setup. The idea of a move really has been, wouldn't have made sense probably to just move to another bank, but looking for something to have an impact, or more of an impact, to build and grow really again. And I've seen Solactive, I knew Solactive, we were closely working with Solactive. And the idea really has been to, let's say, help a smaller startup grow into a serious contender, into a global business. And that's really the task and journey ahead and Solactive, and what got me excited to ultimately move over.
All right, so let's talk a bit more about Solactive, and maybe you can tell us a bit, starting by telling us what the company does, and then the question. So it's indexing. We'll have to think about as well about what makes Solactive different than the indexing companies that we all know, and some S&P has. When we say S&P, for example, it's in many people's mind it's an index, which is the S&P 500, whereas it's the name of a company. So yeah, tell us a bit about what let's start by asking what Solactive does on a day-to-day basis, and the difference between the giants.
On a day-to-day basis, in very simple terms, we calculate, produce, develop indices. Indices as a measurement of financial markets, and really in all different areas and segments. By segments, that can be a specific region, the world as a whole. That does include different asset classes, starting off from equity to, it might be the bond index, or a combination of different asset classes, commodities, really all different ways to slice and dice and ultimately measure the performance of specific segments in the financial markets. The way we do that, and you have mentioned the S&P as one of the very, or probably the most well-known player, with the S&P 500 being the most well-known index. Now you can throw in FTSE into the equation, you can throw in MSCI into the equation. And when I mention these guys and our largest competitors, most likely and immediately you think of that specific one index, or at least that specific family of indices that comes to your mind. The way they do the business is pretty much driven by that recognition and by that brand. We usually refer to these guys as the brand manager, because clearly and obviously this brand has a lot of value and a strong recognition. The way we looked at disrupting the indices and approach creation and calculation of indices is completely not from this brand-driven angle, but much more coming from a larger number of indices. So while we don't have this one S&P 500, I need to have much more indices, and in order to create and calculate much more or larger number of indices that is driving us, we have a lot of and a strong focus on IT and platforms and the way we run, calculate, and actually develop these indices. That's then probably the headline for this podcast, the fintech element of it, to combine finance, i.e. measurement of financial markets through indices, with the technology approach by having a very strong focus on that. The examples you can mention is, right about half, slightly more even than half of our staff overall is in IT-related software development, data scientists, etc. functions to really work on and build that core engine, that IT foundation, to ultimately create a larger number of indices and calculate them in the most efficient way possible. That's really one of the main differences, brand versus the platform-driven approach, if you like.
And just to make it 100% clear, so who are the clients? Who will be buying those services from you?
So starting off from our times at Deutsche Bank and in London, we have been consumers and users of indices ourselves. So at large, banks, particularly investment banks and their respective structuring or trading desks, are users of indices in general and consequently clients of ours. So when we were structuring structured products and trading those, very often the underlying for such a product is an index. That can be one of the S&P 500, as you mentioned, an example, and increasingly respective indices from Solactive as well. So client base, a large part and footprint on the bank side, particularly investment banks. The second and probably most visible part is really issuers of ETFs. If I think very simply of an ETF, exchange traded fund, as a tool, investment vehicle that ultimately tracks the development of or performance of an index. Clearly, every ETF needs an underlying index. And while this part of the market, the ETF industry, is growing and you have more new ETFs, consequently, you also have more demand in your indices. So ETF issuers, sponsors of ETFs in the asset management side is a second large pillar on our client base. And last but not least, as another example, ultimately people managing money, asset owners, that can be, your individual pension fund at the end of the day, are increasingly replicating their investments passively and measure them and trade them or manage them against an index as underlying.
And we'll talk a lot about the fact that you're German and it's in the motto, the German engineering. But can you tell us a bit about as well how many people are there and which locations you cover?
So we probably need to change this slightly. We have this headline of German index engineering because
I like it.
there's going around. If you want to have someone calculating your index, you're probably fine with this boring German engineer. To be honest, that has a strong recognition, particularly with clients in the US. But if I mentioned that already, if I mentioned the US, that already shows you it is actually a global business, both in terms of client footprint, but also in terms of setup, how we're growing and have set up the firm. We have, I would need to check the latest numbers, but I believe more than 30 nationalities across the firm. Even in the headquarters here in Frankfurt, the daily language spoken really is English, so it's very international from that sense. We are in total right now about north of 200 or 240 staff at Solactive. As I had mentioned, about half of them in IT, data scientist related functions. The largest location is the headquarters over here in Frankfurt, with additional offices from the indexing side in Toronto as our hub over in North America. We've recently, or about a year ago, opened an office over in Hong Kong, so that makes it a 24/7 global coverage setup. Plus, not to forget, very important, as I've mentioned, IT, our team of software engineers sitting in Berlin, the Fintech hub, if I should say, here in Germany, and a separate dedicated team of data scientists in Dresden. If you sum up all of these teams, Solactive as a whole is, as I said, about 240 people right now.
Wow. And indeed, the German thing is maybe just a minority, but I still like it. And I think out of this crisis, there's been a lot of competition in terms of country brands, right? So Germany again has done pretty well. You would expect them to do that. And as you know, I'm French and Greek, so I see the Greeks are also doing pretty well. So it's very important, but it can be also a controversial subject. So let's move on to something else.
We can throw in, right, with sitting at home and looking at homeschooling of the kids. My older one actually had to learn the foundations of the European Union, which was a good refresher for me as well. So literally from Churchill to Maastricht Treaty up to today. So the half French, half Greek, with the German, both having spent a lot of time in London. We could probably do a separate podcast series around that.
Yeah, quite typical of London, and but we're not going to broach. We're not going to even approach the Brexit subject. So I wanted to ask as well, an important thing that I've noticed on the company announcement is you're acquiring data analytics company, and it seems it was linked, if I remember well, to ESG. So can you tell us a bit about why this move and how important it is to have even more advanced analytics in that space?
So we're getting towards the subject of ESG, sustainable investing, which again could be a separate and a full other podcast series once we've
Absolutely.
done the Brexit one. ESG is really at the core and heart and the main trend, I would say, in the financial markets. And then consequently also when developing and setting up indices in the passive asset management space. Our interest being IT-driven, focusing a lot of data on the way we manage and generate data points and manage data points as a whole, makes us very interested generally and overall in innovative ESG-related data points. And they can be really different ones across E, S, and G. I can talk in a second more specifically about the E side, pretty much driven by climate and climate change and climate strategies. It can be around the S, so more social side, gender equality, diversity being a large part there, or really the G in the sense of governance. So we are interested. We have cooperations with many of the really dedicated and focused ESG data provider. And as you've mentioned, have actually done different investments to ESG-related data providers. One actually sitting pretty close to where you are right now, just outside of London, out in Essex, a company called Minerva Analytics. That is by origin a provider of proxy voting services in the industry already since many, many, many years. And as part of their proxy voting services, they do have a lot of ESG-related data points as well. Why are they interested or interesting for us? Of course, I can use those data points for specific and dedicated, let's say, a top quality ESG UK benchmark index. For that, I need data points. I can get them through partners like I've just mentioned to Minerva. One example. Second one, as I've just mentioned, climate within ESG. That is, I would say, the biggest trend if you particularly look at investment themes by asset owners. So, for example, public pension funds, be it state and federal regions here in Germany or really across Europe, leading there. They very often increasingly look at implementing climate strategies to basically reduce the emissions or carbon emissions impact of their investment portfolios, be it in equities or fixed income, and also need data points around the E and ESG to measure that impact and to help setting a path for a carbon reduction of their investment portfolios. Also driven, last comment probably on that, by many of the areas of the regulatory initiatives coming out of Brussels, and for example linked to the Paris Agreement, looking to reduce carbon emissions as a whole, and investment and investing along ESG is just an important part of that and becoming ever more important.
And from my understanding, the data, it's not as clear as if you look at, well, I don't know, you could invest with fundamentals, right? You could have a fundamental layer, and then pretty much everyone would agree, I guess, on the calculations. I guess on ESG, what is good for the environment? How do you measure it? It becomes a lot harder, right?
Absolutely. And there's, let's say, two problems associated to that. One is consistency, and the other one is how do I understand them? How can you relate to them? Yeah, I have difficulties to relate to a number, to me quite random, tons of CO2 emissions. That's nothing I can feel. That's nothing I can personally measure or understand. Also, it might be the right matrix. So you've just asked about investments. We've entered another partnership with a startup here in Frankfurt called Right Based on Science, and they have an innovative approach to translate the climate impact from tons of CO2 emissions number into an actually degree Celsius impact, which is something I understand because you look at the temperature every day. And if you basically read and look at some of those numbers and some of those studies and see that one of the studies they did, the German economy as a whole, or the largest companies would continue to behave the way they do right now, that might mean that the overall temperature will have an impact of warming up by more than 5 degrees Celsius. That's something I can understand and I can actually relate to, because you and I clearly don't want to have that planet to heat up by another 5 degrees, right? So this is how can I relate to those specific data points. The second, probably bigger aspect is ESG data as a whole is pretty inconsistent. We have different definitions globally and everyone individually as of what is right behavior, what is good behavior in certain aspects. A main example I like to quote that works well also with you is if I just move over to the border in France, there's a different definition when it comes to nuclear power than we have here on the ground in Germany. So one is super rated ESG and the other one is the worst rated in ESG. So that consistency, across different countries, but also if you look at different providers and players in the industry, like every asset manager will have his own definition. That consistency is missing, and I think one of the key drivers going forward to have overall more acceptance and understanding for ESG as a whole.
Understood. So I think there's no doubt that the investment management industry is embracing it. There's very few people say we're not going ESG or it's not what we're going for. But I guess so. Yeah, the big difference, even especially if you look then even to the end investor, is if I'm putting my money into something branded ESG, it's very hard to assess. Well, there's a consistency, as you mentioned, but it's also what new data could do is almost look at the impact of your dollar put in there, right? Is that an idea of the startup that you were mentioning, which is called Right as well?
Right, based on science.
Right. Okay. All right. That's the name.
That's the full name. But yes, measurement of the impact is one idea. You were right, as you've just mentioned. Every institution is looking at it. Everyone is talking about it, right? The big C before Corona has been climate all over the place and the most prominent topic. However, I always say that there's much more talks and hype around the subject than actually putting your money where your mouth is and actually assets following that trend. So there's a lot of way to catch up and there's still a lot of developments ahead. I have no doubt in my mind that this development will come, but right now there's a big discrepancy between public noise and debate versus the actual investments that are ESG related. And then yes, to your question, ultimately, of course, the impact should be measurable, particularly if you think of climate, to basically use your investments, use the funds, use the money to trigger behavior of companies, but frankly also of individuals ultimately, right? I don't like to finger point at companies and they need to change their behavior because often they offer services that we as a consumer consume or actually demand. So that trigger of behavior, of course, from a corporate perspective, but also from a government, public officials perspective, as well as you and I and everyone else individually, that should actually generate that impact. Yes, that's, I guess, the idea of it all.
Yeah, no, I mean, it really makes you think of also the impact on going back to indices, because from something which is quite simple, I just invest in market cap. That's what indices do. They replicate the market and you get the market, to trying to get an impact and therefore needing a lot more data and therefore probably needing a lot more computing power, and even that's when maybe the artificial intelligence, you said you work with a lot of data scientists. So the data and the AI or data scientists, they're the ones who kind of make the link between, our intentions and what the investment will actually do, which I find quite a fascinating perspective in terms of the indices. I don't know if that's the right summary of how it looks.
There's a bit of presence versus what's ahead. So as of now, most of these analysis, or a large part of these analysis, maybe a too large part, are still being done manually by actually analysts looking at it and making their own conclusions. Then, in the very far future, you've mentioned AI, and I guess there's also different definitions, many different definitions as of what AI actually is. So at some stage in the future, yes, that can hopefully or probably be fully done in an automatic way and fashion by relying on some sort of AI algorithms to do that. I think the next steps is actually more a combination of the two, where AI, NLP mechanisms, algorithms can just help to structure, generate those data points in a more and faster, easier, more efficient fashion, which then most likely will still require some human touch and element and understanding and probably checks and analysis on top, to then really have a better quality of data points and use them really in different shapes and forms. Of course, our home turf, to translate them and use them in indices. But I really think in different ways how to use data. And it's no coincidence that the best examples for that happen to sit not here in Europe, neither in the UK nor in Germany, but over in the US, where they tend to, it looks like, manage, understand data and make businesses and actually also values for us as consumers out of it more better than we do over here in Europe. But there's a way ahead, there's a look ahead, an outlook ahead, and that's really, I think, also great opportunities in the fintech space, combining some of those data points from finance with actually a technological approach to it. There's a lot of changes ahead.
All right, so to go to leave the data for a while, another thing that I noticed from Solactive is you're an index provider, but you're also coming up with some ideas, right? You talk about future trends and things like that. So can you tell us a bit more about that and why such an initiative?
So ESG, we've just ticked that box. That's probably one of the biggest trends out there, and it clearly is one of the future trends. And as part of ESG, you can derive all sort of investment themes. Another big one that impacts and changes our daily lives are different areas across, let's say, disruptive technologies. And the whole space and area of thematic investing, thematic investment products, and us producing thematic indices as an underlying for those has significantly grown, let's say, the last 2-3 years, which really a strong focus or footprint in what I just labeled disruptive technologies. So it's really from future of mobility. We've just launched a work from home index that is one of the most recent examples of, hey, our behavior changes and we need different technologies, and Zoom probably being a prominent member in that. Or to mention another example, cloud technologies and the developments around that really put in index format. So you did have a lot of investments with a, let's say, traditional sector approach. I think that thinking along sector lines is changing and gradually more developing into really thinking along themes. I've mentioned the cloud example and many others, driven by and a reflection of how our behavior and use of technology changes. So many developments and interesting ones around this area and really ever changing.
All right. Yeah. So the idea as well is for the end investor, rather than just thinking, oh, we'll work from home and Zoom looks like a great company, we're using Zoom as we record this. It's to say, oh, well, what else can I get that will give me exposure to this new trend, right? Which is, I guess, something, at least from an end investor or for a small investor, very hard to do. And
Exactly.
So this is kind of the solution you're bringing to.
Exactly, and that's where we help with the analysis. How do you define the themes? How do you see that? And the trends are actually changing and developing. So, work from home probably wouldn't have been en vogue that much or to that extent 6 or 12 months ago. Now it's clearly one of the top themes, one of the strongest growing ETFs where we are involved in as index provider, just hit the 100 million mark this week with a partner over in the US. And the index is actually around esports and e-gaming. Again, another so that index or that ETF has been launched, probably close to about a year ago. But the demand really is driven by, I guess, more people are now gaming from home than they did a few months back.
Yeah. All right, great. So to conclude, what are you most excited right now in this fintech space? What are the areas, either in indexing or more generally in fintech, that you think have the more promise?
I'm excited, because it's a good mix of the different worlds. So me coming from the investment banking background and live on a trading floor is different to, if I use as an example, I've been on the monthly team meeting with our really software engineer team in Berlin. The way they talk, the way they approach the business or technology in that sense is obviously fundamentally different to what we did more than 10 years ago jointly in London. And I'm learning a lot of new stuff from agile techniques, from working in sprints and organizing projects in squads, etc. And when we ended that video call, probably also on Zoom, it ended with virtual claps from all over. That's really things that haven't been in my nature, haven't been in my working life. Probably not even today, but definitely not 5 or 10 years ago. However, I expect, and that's exciting, that approaches will mix and mingle. So there's not just the traditional approach like we used to do business, and there's probably not just the now nowadays agile approach, and it will really be of benefit for those, let's say, different areas to combine and benefit and learn from each other. I'm personally excited being part of that and learning new stuff and approaches there myself. Other more broader areas, the way we do banking, the way you and I have learned to transfer money and trade accounts will continue to be significantly disrupted by different technologies. Now sitting at home, I'm realizing how the kids, definitely over the past 2.5 months, got used to using technologies and interact naturally on the iPad. That will make them to significantly change their banking attitudes. The way they share data will change the way how we used to do transactions. So there's many new opportunities for disruptive players versus traditional players. I'm thinking, be it an insurance company, be it a bank, be it an asset manager, and the combination thereof offers many opportunities for disruptive players. That's exciting. The exciting part and interesting part about it is clearly we don't know who will be the winners and what will be that next trend that is shaping it in 3 years' time. But it's driven by our behavior, and there's a lot of potential ahead for sure.
Yeah, great answer. It's an exciting place to be. And my final question, which is about the business, would be again about Solactive. You're involved. Your role as a chief markets officer is also about business development. If you had an extra, I don't know the figure, but if you had a lot more budget in terms of growth, where would you spend it and why?
That's a good question. So personally, it's time. If I could buy that extra amount and hours of time, that would be helpful, both personally, but definitely also for the business. Business development, where to go. So there's the whole field of data that we've covered, and we are doing a lot there already, but it feels like that will look different, fundamentally different, give it another 2 or 3 years time. So definitely an area to invest and of significant focus that we have also spent an even more increasing number of time around all sort of ways to manage data, generate data. That's clearly one. If I had to pick one, it's around data and technology even more. Most of the other answers would be more of an evolution. Spending more time with client, going out, new clients, different segments, different regions, etc. But the more disruptive, leapfrogging part, I would expect on the technology side. So the additional dollar on that side.
All right, great. And where do you see, I'll add one more. So where do you see the industry going in a few years' time? How will the landscape of index providers look in, I don't know, if we want to pick a year, 5 years or in the next decade?
There I'm pretty clear. I have started to look at indices. I think this has been still in the student days with a book, an early book about passive investing. And what I've taken away and acted ever since is that investing is probably the one part in your life where you should be happy to settle for the average. So where it's okay to have an average result by just buying the market. That has really guided me throughout my career on the one hand, but also if I look at the probably personal investments, mainly and pretty much always buying index-based products. If you look at the share of passive versus active investing, passive is growing at a significantly faster pace, and they're looking at the next 3, 5, 10 years. That game, I don't even want to call it battle between active and passive, will continue. The trend towards passive on back of digitalization, on back of cost awareness, that is just set to continue. I think the right thing to do. I'm fully convinced by that. So that evolution will continue with a continued trend and shift towards passive. Then being on the index side, let's say a service provider in that passive game, in this passive management, in the creation of indices. That's really the way ahead. I expect that to continue, if not at the same pace, probably even at an accelerated pace.
Yeah, we should see how the assets look even just after the crisis, right? I guess it's too early to call the shots, but
that's a good point. Where look at the last 2-3 years, where if I had made a statement like I just did, you immediately start with a criticism on ETFs and passive, and some sort of crisis and market downturn will change that, and pose all sorts of potential problems on ETFs and passive management. I guess we're in the middle of and have seen an extreme market scenario just a few weeks back, and none of these perceived problems and issues have actually kicked in, if at all. As I said, I think the trend has accelerated and is here to stay, no doubt.
Wonderful. So let's finish with a few lighthearted questions, quick-fire questions about you. Are you ready?
I'm ready. Go.
What would you do if you were to change career paths?
That means,
What
in hindsight, if I could change something?
Okay. Well, I guess if you could go in the past.
Answers.
If you go in the past, and yes, all right, go in the past. If you, I don't want to age you too much, but a few decades earlier, and you say, okay, instead of taking the right turn, I don't know if it led to Deutsche Bank, I take the other door.
That's like I've spent a long time at Deutsche Bank. That's within Deutsche Bank. I have benefited a lot personally, and I loved the years in London, almost 10 years, and that's been a great time. But it's been London and Frankfurt, so a large global organization would have and did offer different opportunities. Be it go over to Asia or change divisions within the bank. Looking back, and you never know the result or what would have happened, but that's a change, a move that I could have and probably should have made, because meeting, it's about different cultures, a network, different people living again in a different environment, country, region. That would have been something, not that I would miss that or that I think, hey, it's been a mistake or whatever, but as you mentioned, walking through that other door, that's probably one that I should have at least looked at much more closer.
Yeah, maybe still there. Solactive, as it expands, throughout the world, maybe many more doors will open. And the last one, as we're coming out of confinement, favorite place for holidays?
That's the easiest one. You can probably ask everyone around me and you will get the same answer. That's Mallorca. That's Mallorca in Spain. And when we get out of all of this and can move around freely and hopefully won't have too much like severe and health effects, etc., that round of golf in Cap de Pera golf on Mallorca, that glass of red wine, I'm looking forward to that. And if you need any advice or information on golf in Mallorca or red wine in Mallorca, we could do yet another podcast.
All right, you're the expert. Okay, fantastic, Timo. Well, it's been really great to have you. Thank you so much for your time.
Thanks for listening, and thank you to our guests who make this possible. Subscribe to never miss an episode. As this is a new broadcast, if you could give us a 5-star review on iTunes and your favorite podcast player, that would be great. Let's work together to accelerate fintech towards the 2030s.